things started. Our pre-market review for today, Wednesday, day 14. Day 14. Let's see what we got. We already know today is the 15th of December, and we got the Fed. The Feds are having their speech today. Depending on what's being said, the market could go either way. The market could go either way. It's been tanking all week, starting on last Friday because of this news being pending. A lot of people been selling, trying to get out before the news. So today is gonna be the day. We see the Dow sitting at 0%, no gain, no loss. S&P 500 at positive 0.02%, no gain, no loss, and the Nasdaq at negative 0.07% with a small loss. Really not no loss as far as we're concerned. That's nothing in the grand scheme. So today we really and truly we can pretty much know that the market is going to be pretty flat until the Fed tells us what's going to happen. So today they're going to be talking about whether they're going to increase this debt ceiling and whether they're going to increase interest rates, or whether they're going to try and keep interest rates low. And these are things that they're trying to do in order to stimulate the economy. Depending on how the market feels about the news, everything could either come down or everything could go up. So if they say, for instance, that they're going to push the interest rate increase out again, we can see the market go positive. And I think that speech is going to be today on CNN between hours of 10 to 1 maybe, or it's going to be around 2 o'clock. We'll just keep our eyes open for that. We'll be looking. But it's definitely going to be a major thing today. So today, that's what we're looking for. We're looking for the news from that to stimulate or cause a decline in the market. So y'all, we gotta realize, let's not worry about that, because we can make money both ways in the market, right? We can make money both ways in the market. Let me check this out. Let's see. Stock market news live. Update: stock futures drift ahead of Fed decision. Let's see. Stock futures trade flat Wednesday morning as investors looked ahead to the Federal Reserve's final monetary policy decision of 2021 and weighed the central bank's potential response to persistent inflationary pressures. Contracts on the S&P 500 were little change to the blue chip. All eyes on Wednesday will be on the Federal Reserve's monetary policy statement and press conference. So as you all see, it's not much. It's not, everything is based on this Fed speech today. Specifically, many investors anticipate the Fed will ramp up the rate of tapering of its asset purchasing program, which took place at a rate of $120 billion per month in combined treasuries and agency mortgage-backed securities from the start of the pandemic through November. Last month, the Fed began dialing back these purchases by $15 billion and announced another $15 billion reduction for December. So I want you guys to come here and read this article. Y'all do see it on my screen. This right here is a brief explanation of how they feel and why the market is either going to go up or go down based on today's news. So we gotta be prepared, right? Now, the reason why I said we can make money going up or down, if it goes up, we already have our positions established in a few companies at this point, possibly in one or two companies. One or two companies is always a good start. So if it goes up, we have stocks in those companies, and our price is going to go up. But also we have options. Remember, I taught you all early on about options. We have call options and we have put options. A call option is saying, hey, I predict this price is going to go up by this date. I predict the price is going to go up by this date. And there's a set point. And I'll be showing you all probably more of that today, depending on the time that I have free in my 9 to 5. I'll show you all how to set up a call option and a put option, but we're not going to be trying to execute anything today until we hear the news. A put option is saying, hey, I think the stock, this price is going to go down to this much by this date, right? So those are the things we have. This much by this date. So those are the things we have. Let's go check out something. So here, matter of fact, I can show y'all now. Here we have my Robinhood account is actually working today. And we have charge point, right? So we click on charge point. Next we click on trade. See trade down here, we click on trade. And then you click trade options. Right? Trade options. And there's actually a brief description in Robinhood. That is one thing I love about using the app. So we can read this together. Buy a call gives you the right to buy 100 shares of the stock. 100 shares of the stock at the strike price by the expiration date. You could profit if the stock goes up and could lose money if the stock goes down. Right? Sell a covered put gives you the obligation to buy 100 shares of the stock at the strike price by the expiration date. Right? You'll earn a premium up front, but might be obligated to buy the shares for an unfavorable price. That's if the stock does not go your way, you have to buy the shares. It's possible to buy the shares. So there are different things, right? Credit, it puts credit spread. So it's a bunch of different things. I want you all to come in here and learn. You got to come in here and learn these things. So if we click down, buy a put. So y'all, I don't know if y'all saw me click down. We click this down arrow. This is the arrow. So this is for a put on the app. Buy a put gives you the right to sell 100 shares of the stock at the strike price by the expiration date. You can profit if the stock goes down and lose money if the stock goes up. Sell a covered call. So these are just the different things that we can do to make money, right? So if you see here at the top of the screen, we have our dates. We have our dates here at the top. So if we say, for instance, charge point, we can go out, some months. If we say here, January 14th, we buy a call. You all see at the top, it says buy a call. So you see buy, you see the call. So always make sure you're looking at these things, because I've known people to make mistakes on which option they select, and they end up losing money or getting, making a mistake. So buy a call. It shows you the current share price down here. Shows you the current share price down here. And then it shows you the different call prices, right? You see those. And right here in small words, you see break even. Break even. So that break even is the price that means you are winning. If the stock goes up to that price, you won right there. Even if it doesn't go up to that price, if you sell early, so if you take your profits early, then you win. So if the stock goes up and you see those greens and you decide to take your profit, that is perfectly fine. Always take profit when you feel comfortable. So let's look. I see this 20.5. Let's say I say I like it. I click on it. I want to see what it has. It has, I'm looking for the open interest. It only has an open interest of 19. Open interest is how many people are buying these options. That's not a good option. And if nobody's looking at it, which you can imagine, that many people have sold their options due to the Fed, right? They're looking at this and they're like, nah, we don't know what's going to happen. So that's a good thing to look at when you're in here. But just as an example, if we want to add one, we click on it right here. You click on it to the right. Continue. And you put in one. So it multiplies that limit price by 100. So you see that it says $1.29, but this is actually going to cost us $129 because it's buying you 100 shares of that company at a cheaper price. See that? So we have here, we got buy one. We have the price. And that's that price times 100. So there you go. Now that's an example of a call option. We are not doing this call because we do not know where the markets are going to swing today. But I wanted to make sure I provided you all with an example, because when we start doing this, if we do this, it's going to come fast, and we might not have another chance to walk through it again, okay? So I want you to, and again, same thing with a put. Y'all see me change at the top? Change at the top here to a put, a buy put, buy put. And you see those are green because, hey, apparently there's some pressure. Let's see what the open interest is on this one. This one actually has 149 open interest. So it looks like people are betting on this company to come back down a little bit, or they're still holding. So either some people are still holding because the prices come down so much, and they're waiting on, if it goes back up, they'll start selling, or they're expecting bad news, one or the other. But hey, we're gonna keep our eyes open, and we're gonna make a decision based on what the market decides to do today. So that's what I have for y'all today. We're gonna keep our eyes open and wait for some news on from the feds, and we're gonna be patient. We're gonna try and make money in this market, whether it goes up or goes down. Y'all have a good day. Y'all leave any comments. Make sure you like the video, and I'll get to you soon.